I think, very simply, there are at least two types of capital that's focused on Europe. I think one type is looking for trophy-type assets and often fueled by sovereign wealth funds and aggregators of high net worth capital and so on and so forth. And I think that capital is fairly global. It's European, it's Middle Eastern, it's Asian, it's North American. The distressed capital is largely in North America, if not to say US, because the Canadian institutions are not particularly active in that part of the market either. Every manager mentioned by this panel so far, with the exception of Internos, is an American manager. So my question is, even though Europeans have created this mess in its own banking system, it seems like only Americans either believe in the opportunity or are able to capitalize on the opportunity. And is that because there's no one in Europe who would require a skill set, or because European institutions are not willing to back this type of investment strategy, it can't find the capital because it doesn't have the relationship to the sources of distressed investment capital, i.e. US investors. And there must be a reason for this, because it's so glaringly obvious that there are no European managers in this space, by and large. And I'd like to hear the
Excellent question, Frederick. I think the European investors, and you know them better than me, by and large, do not really get distress and don't want to do distress. They're more cautious, they're more conservative, and they're more interested in income with a bit of a capital play. And the American investors, there are lots of them like TIAA-CREF who are similar to that, but there are lots who actually want the capital play and aren't too fussed about the income, which leads them more to opportunistic and distress and dislocation. Is the skill set here in Europe, to do it? Yes, I think it is. But it is weird that most of the managers, even the American managers operating in Europe, are using Americans to implement and execute the strategies, not Europeans.
We don't speak in the European languages, by and large.
Indeed. We should run a program, shouldn't we? We should run a course for... if you think of UK people who run American opportunistic funds, there's me, there's Richard Mully,
Catalyst.
Bruce Bossum a bit with Orion, maybe. But yeah, it's...
there are always exceptions, but by and large, this is a US business played out in Europe.
Yeah. And it's a shame, isn't it? Because there's clearly opportunity, and European houses and European individuals are not taking advantage of that.
I'd agree with all that. The only small qualification I'd make is that some of these funds are having an increasingly disparate range of investors. So, for example, I'm aware of one large opportunity fund which has investors, a lot of number of investors from the Far East, Middle East, and one or two from Europe, and also some sort of high net worth money coming in. So, although it's very much a US-based industry, I think with people trying to diversify their returns and perhaps add a sprinkling of so-called alpha onto what may be a primarily beta-type strategy, or where they've already got their income, we are seeing an increase in the diversification of investors coming into those types of products.
Here's what I would bet. I would bet that of the managers you mentioned, at least 60% of their combined capital is from the US.
Yeah. No, yes, it is.
And I agree with you. There is some additional capital coming in from other parts of the world.
Yes.
It is not European now.
No.
But the opportunity here.
And maybe, on both sides of it, the people and the investors, perhaps, Frederick, it's as simple as that it's cultural. So, in Europe, I've operated in 16 European countries. It's a pretty consensual culture, whereas it's not, the States is more aggressive.
And nobody wants to take a haircut.
Well, we're generalizing.
Well, we're generalizing.
Philip's been trying to get in for the last...
I'm American and European. So I don't know which side I'm going to argue for, but everybody you see in the headlines, Blackstone, they're American, TPG, they're American, Starwood, they're American, Kennedy Wilson, they're American, but these guys are the big macro players. So of course they have to come over and they have to take macro regional strategies. So if you're going to take a macro bet on Ireland, if you're going to take a macro bet on Spain, that's what these guys do. There's tons of people doing it in Europe, but they're doing it on a more localized basis. The firm that I used to run, we bought $1 billion worth of distressed stuff in Germany because we were German experts. I'm in Paris yesterday. There are lots of people working on this stuff, European, French, certainly in France, that are doing it on a localized basis. So you just don't see the mega European funds doing it across Europe because by definition they're more local players, except for Orion and Europa, who are probably the two biggest regional players, and they historically don't do distress. You know, they are taking different views. So there are lots of Europeans doing it, but they're just not raising €5 billion funds to do it. They're doing it in a localized, culturally specific, language specific environment. So I think you have to...
But who are their underlying investors?
It depends. So, I mean, but this I think it's less important, and Frederick would certainly be the expert here, where the ultimate capital comes from. The European institutional capital is certainly more risk averse.